Okay, good morning. This is Simon with Trade and Perform Coaching doing the market preview for June 30th, 2023. Okay, so first I want to cover a couple things. Some of them are basic, some of them are not basic, right? So, first I'm going to cover NQ on the basic part, right? If you look from yesterday, where did the market respond from? Look where it is now. Look where unfair pricing was yesterday. Came out of it. So I want to actually criticize myself this morning. I didn't take the trades down there, and they all set up. I didn't take them because I let the PA and the DOM affect my decision making. I won't go through a long speech on it. It just affected me negatively. I should have done better at my decision making process. I did not. That's a learning opportunity for me, and I put it into my C game, and I'm working on moving it to my A game. Number two thing that you will see is on the short side, we never got to the unfair pricing. See that? We just never got to the unfair pricing to do the shorts, right? And then you will see in just a moment, when we break these out into 30-minute periods, right? We came all the way down into the single prints, responded. I screwed up right here because I wanted them to take out that swing right here, and they didn't, right? And you will also notice that where else I made the error, which was intraday after 10:30 in the morning, which is roughly here. I should have been uber aggressive down here. Now, grant you, this little move here happened in the last 10 minutes of the day or into the close, so it was a little bit tough to catch. I actually caught a small trade that put me positive over here, but I didn't catch this. But the target down here from here is always up here, and vice versa in a bear market, okay? Is if you're taking the intraday unfair pricing, you're trying to move it over here. If I was trading in the afternoon, I would pretty much only want to trade an intraday unfair pricing to try to catch this rip up to the other side, okay? So that's one piece. You will notice this morning, I'll show you this in a second, that we've climbed all the way through that unfair pricing. And then when we look in ES, we have a different picture presented to us. Okay, so the first thing you'll notice is ES was never weak. Came back to the volume point of control of the prior day. Let me make sure my mic and my video are operating properly. Oh, maybe I'm not. Am I muted? Oh, I am. Sorry, guys. I'm going to start that over because I was muted. Apologies. Can everyone hear me and see me now? How about now, guy? Sorry. I apologize. Okay. Sorry, I'm going to start over. Let's do this. I'll just edit the video, but we'll just start from here at 8:10. This is Simon with Trade and Perform Coaching, doing the market preview for Team TnP. So let me start this over because what I was covering is important, right? So a lot of this, what I'm recognizing when people are failing at trading is not breaking it down to simplicity and understanding basic cores of ideas like the stop sign idea. You see a stop sign, you stop, right? So trading should slow down and get negotiated in these areas, okay? So if you'll look from yesterday, we opened up, we couldn't make it to unfair pricing, we came down into unfair pricing and found responsive buyers. As simple as that, right? Then in the afternoon, this is the 10:30 split. If you're going to trade in the afternoon, I would only want to trade in unfair pricing, and the goal is always to shoot it to the other side. I'll grant you, this entire move came in the last 10 minutes. I saved my day right here and turned it positive. I just didn't do anything in the morning. So in my C game from yesterday, I let the price action affect my decision making. In that area in the morning, there was 3 clear opportunities, which I'll cover in a moment, and I took none of them because I didn't like the way the market was trading, okay? And obviously, it cost me money. I was wrong. The market was right, as is usual, right? I should have taken those trades, and my goal should have been to get those trades as close to up here as possible. So always the first goal is either the intraday volume point of control, the midpoint, the high. We couldn't take out the high over here. You'll notice during New York lunch, it failed. Found sellers, came back in, Fed speaker pushed up, and of course we've pushed through all this overnight. We had a different scenario in ES. I'm going to slide this over. So you should tell yourself that story, right? At the end of the day, you should tell yourself that story. Now, in ES, it was a different story. We opened up. Notice how there was no unfair pricing up here until, pull this in, right up here was the unfair pricing. And there was, so in lieu of the inability to get to the unfair pricing, the market ended up closing at the naked volume point of control, right? But what we wanted for the long was to get down over here. It just didn't give us the opportunity to do so. But if you look at how the market traded yesterday, right? So again, one of the guys that I really like is Mark Ritchie, and the other guy, they're both swing traders. Mark Ritchie and the other guy's name will come to me in a minute. Italian sounding name. Mark Minarvi. And both of those guys say the same thing, right? The lack of success in 99% of traders is their inability to stick to and execute the same strategy over and over, right? So here's what the lesson we're learning. Here's the lesson we're learning in fair pricing and unfair pricing, right? Look, when we got into the single prints right over here, this is rejection. If you were willing to short ES, this is rejection down out of here, right? Comes back up, right? Clears the high, goes to the naked volume point of control. Rejection from there. Where does it come back to? Intraday unfair pricing. Now, that was your one long opportunity, but it was a great long opportunity. I'll show it to you in just a second. It took you from 44.20 to 44.35 by the end of the day. It's 15 points, right? If you look in the morning, right, what does the market naturally want to do? We rejected, we pushed into single prints. It attempted to get back to the volume point of control. When it failed, they had to push it up into the they had to push it back up into this naked volume point of control where it failed, pushed into single prints, and reversed. This stuff is patentable. The pattern repeats over and over again, right? So all you got to do is keep a focus on one thing, right? So many of us are focused on how much money can I make, or I've got to make this amount of money to succeed, and they're not focusing on, like, for example, if I'm driving to work and I'm approaching a busy intersection and I see a red light and I decide I'm just going to blast through it, and I'm going to do that for every intersection I go through, what's the odds that I'm making it to work on time that morning? Like, it's zero, right? It's zero that I will make it to work on time. It's zero that I will make it to work on time, so I'm going to have an accident, right? So this is what I would say. Like, when I go through this chart, right now, there'll be some places where you can find where you go, look, this was an unfair pricing and it went lower. It's true. It did. But I didn't get smoked in here, short or long, right? There can be days where you can point out and go, hey, look, Simon, it came into the unfair pricing and rejected down. I wouldn't have been short. That's true, right? That is true. But if you look in the afternoon, I'm going to put my little 11:30, which is usually right about here. And I start focusing on trades to the long side below here. So this is, let's put the line on it. This is, let's see, 1 hour, 2 hours. This is about 10:30 right here, right? So if you'll look at 10:30, right, notice that it comes right down to the unfair pricing, finds responsive buyers, and pushes all the way back up past the unfair pricing intraday, right, into single prints, right? Those are single prints. It then failed, but if you'll notice where it failed back to, comes all the way back to the unfair pricing again, and then bounced into the close, right? So the pattern in general repeats. But I will tell you this, if I didn't take a long or a short in here, odds are I did not get run over on my setups. I didn't get frustrated. I didn't get angry. Might have been bored, right? But I didn't get run over. It's a good practice. Sometimes it'll exceed it. Sometimes it won't. But again, if I focus on those areas, okay, and literally what you're going to notice as I unfold these is that someone could walk in. Okay, so here's the deal, right? You could walk in and start trading at 10:30. It's roughly right here. 1, 2, 3. You could start working at 10:30 and have pretty damn good days, right? Look, we're past 10:30. There's the unfair pricing. We took out the low and bounced. Now I don't do that, right? If I was going to do that and that was going to be my only strategy, I wouldn't come to work till 12 o'clock because I'm pretty tired by the afternoon. But the idea repeats. Now you can find places where it doesn't repeat. Here you go. This was trend down, but you'll still see they obviously attempted to bounce out of unfair pricing initially. Failed. Now this is 10:30 right here. 1, 2, that's 10:30. That's 10:30. This established. So this may have moved, right? But usually by 10:30 it's established. So originally, if we had unfair pricing, it would have been over here. Then they took out the lows. But eventually, once we were over here, you could see this was unfair pricing right there at 43.74. Comes back into unfair pricing and bounces, right? And you'll see that develop, right? If you'll follow it intraday, I know here it's a valid argument because you can say, hey, it could have changed. We don't know for a fact that it looked like that at that time. And that's absolutely true, right? But I can tell you I've witnessed it enough times with my own eyes and taken the trades in that area that I know if I wait for that area, I have a good odds of getting the trade in combination with the algo, right? So my I'm not going to say who, but someone had to quit the room. I'm not going to say it. They had to go back and take a job, right? They just ran out of time on their trading. Okay, nice guy, smart guy, nothing negative to say about him. Some critiques of his trading, but shit, who doesn't have critiques of their trading, right? Um, but at the end of the day, they had to go back and take a job, right? And that's, in my eyes, that's unfortunate because that person had the ability to make it as a trader, right? But you have to do something that's very, very important, and that is you have to simplify. Okay, so now I'm going to take a minute. I said I'd cover the plus signs. I actually think this is more important, and I want to cover it really quick. It's from Josh Waiskin from The Art of Learning. Probably breaking copyright laws here, so I guess if he wants to come after me, he can. Well, I'm going to go back. Okay, so he's talking about the preparation here for his trading and how he simplifies stuff, right? So listen to it. Oh, and he's talking about two different types of learning. There's one with a fixed mentality. This is as smart as I am. I can't learn anymore. And those with a mentality of I can get smarter, I can get better. Okay, let me see if I find it here.
Starving itself, so it doesn't grow to have to find a new shell. In my experience, successful people shoot for the stars.
Can y'all
Put
hear
their
that?
hearts in the line in every battle, and ultimately discover that the lessons learned from the pursuit of excellence mean much more than the immediate trophies and glory. In the long run, painful losses may prove much more valuable than wins. Those who are armed with a healthy attitude and are able to draw wisdom from every experience, good or bad, are the ones who make it down the road. They are also the ones who are happier along the way. Of course, the real challenge is to stay in range of this long-term perspective when you're under fire and hurting in the middle of the war. This, maybe our biggest hurdle, is at the core of the art of learning. Let's return to the scholastic chess world and focus on the ingredients to my early success. I mentioned that Bruce and I studied the endgame, while other young players focused on the opening. In light of the entity incremental discussion, I'd like to plunge a little more deeply into the approach that Bruce and I adopted. Rewind to those days when I was a 6-year-old prankster. Once he had won my confidence, Bruce began our study with a barren chessboard. We took on positions of reduced complexity and clear principles. Our first focus was king and pawn against king, just 3 pieces on the table. Over time, I gained an excellent intuitive feel for the power of the king and the subtlety of the pawn. I learned the principle of opposition, the hidden potency of empty space, the idea of zugzwang, putting your opponent in a position where any move he makes will destroy his position. Layer by layer, we built up my knowledge and my understanding of how to transform axioms into fuel for creative insight. Then we turned to rook endings, bishop endings, knight endings, spending hundreds of hours as I turned 7 and 8 years old, exploring the operating principles behind positions that I might never see again. This method of study gave me a feeling for the beautiful subtleties of each chess piece, because in relatively clear-cut positions I could focus on what was essential. I was also gradually internalizing a marvelous methodology of learning, the play between knowledge, intuition, and creativity. From both educational and technical perspectives, I learned from the foundation up. Most of my rivals, on the other hand, began by studying opening variations. There is a vast body of theory that begins from the starting position of all chess games, and it's very tempting to teach children openings right off the bat, because built into this theoretical part of the game, there are many embedded traps, landmines that allow a player to win quickly and easily. In effect, to win without having to struggle to win. At first thought, it seemed logical for a novice to study positions that he or she will see all the time at the outset of games. Why not begin from the beginning, especially if it leads to instant success? The answer is quicksand. Once you start with openings, there's no way out. Lifetimes can be spent memorizing and keeping up with the evolving encyclopedia of chess openings. They are an addiction, with perilous psychological effects. It's a little like developing the habit of stealing the test from your teacher's desk, instead of learning how to do the math. You may pass the test, but you learn absolutely nothing. And most critically, you don't get an appreciation for the value or beauty in learning itself. For children who focus early on openings, chess becomes about results. Period. It doesn't matter how you played or if you concentrated well or if you were brave. These kids talk about the four-move mate and ask each other, how many moves did it take you to win? Chess becomes one-dimensional, winning, and winning fast. Children who begin their chess education by memorizing openings tend to internalize an entity theory of intelligence. Their dialogues with teachers, parents, and other children are all about results, not effort. They consider themselves winners because so far they have won. In school, they focus on what comes easy to them and ignore the subjects that are harder. On the playground, they use the famous "I wasn't trying" after missing a shot or striking out. Once I was in Arizona giving a lecture on simultaneous exhibition to a large group of young chess players and parents, and the organizer of the event picked me up at the airport bragging that his son hadn't lost a chess game in over a year. Obviously, this was a record the whole family was proud of. I knew it was coming. Classic anorexic hermit crab. When I met the child, he was a moderately talented boy who was the best in his school. He had learned some quick opening attacks and had a natural feel for basic chess tactics. Clearly, he had started winning and then had been praised effusively for his genius. As a result, the boy refused to play anyone outside of the circle of friends and competitors whom he knew to be inferior. His favorite opponent was his father, who was a weak player and no challenge at all. To his school buddies, this boy was a chess god, but compared to serious chess-playing children around the country, he had a long way to go. He was a big fish in a small pond, and he liked it that way. The boy avoided chess throughout my visit. He didn't want to play in the simultaneous exhibition, and was the only child at the event who was resistant to instruction. His winning streak and the constant talk of it had him all locked up. He was terrified of shattering the facade of perfection. This child was paralyzed by an ever-deepening cycle of entity indoctrination. Many kids like this are quite talented, so they excel at first because of good genes, but then they hit a roadblock. As chess struggles become more intense and opponents put up serious resistance, they start to lose interest in the game. They try to avoid challenges, but eventually the real world finds them. Their confidence is fragile. Losing is always a crisis instead of an opportunity for growth. If they were a winner because they won, this new losing must make them a loser. The long-term effects of opening madness are clear, but there are also serious immediate weaknesses in young chess players brought up in this environment. Just as there are inevitable ups and downs in a career, there are also momentum shifts in individual games. Most of my early rivals were gifted children, and they are prepared with hundreds of traps with which they could win right off the bat. Playing against these kids was like walking through a minefield, but I was good enough on my feet to navigate most of the danger. I often came out of the openings in a little bit of trouble, but then I took control. As our games progressed, my opponents moved away from their area of comfort, while I grew stronger and more confident. They wanted to win before the battle began, but I loved the struggle that was the heart of chess. In both the short term and the long term, these kids were crippled by the horizon imposed on them by their teachers. The problem in the chess world is that many... Okay, so that guy is Josh Waston. That's the movie Chasing Bobby Fischer. If you haven't read his book, I highly recommend The Art of Learning. Okay, so what I wanted everyone to take out of that is, first of all, put the game first, the rules of the game. Secondly, okay, it's not going to be easy. Embrace a lot of y'all have a difficulty time with the learning. If you have to, on after every loss, go see how you could have done it better. Check were you in unfair pricing. If you get bored
Like this morning's opening trend day up. I didn't have a great day yesterday. I know I'm probably not going to have a great day today. Why? We're gapping above, we're gapping out of range, right? We are in trend mode, right? And the odds of getting a dip are low. All of that plays against me, right? I'm not very good at it. I haven't adopted a very good game for trend day up, right? And things come into my mind like, oh, what if I take the cheap, the early signal and it goes open strives lower, et cetera, et cetera. But those are all things I can work on, right? I tell a lot of y'all, forget about your theory about the market. Forget about your theory about the market. Forget about what you think should go up and down. Focus on where your trades are going to put money in your pocket. Almost don't even care about the market. Don't worry about all the other stuff that comes with trading and whether you think the economy's hot or loose, or even me. I'm such a great example. Yesterday I didn't take trades because I didn't like the way the dome was setting up. Yet the trades were there to be taken and money was there to be made. How can I possibly argue that my point of view was correct when they obviously worked, with the exception of the volume, with the amount of size you could put on? That was the other. That's the other piece to that puzzle, right? That's the other piece to that puzzle. Okay. So now, if you will trade in unfair pricing, you will have an easier time having success. If you will trade only after we've gone supernova, you will have fewer stops than you would if we didn't have supernova. And if you can make small adjustments to when we're in a down market versus an up market, you will have an easier time. And if you will slow down and recognize that by taking your best trades while over time increasing size, you will have, in my eyes, the easiest path to success. Okay. So the other thing I wanted to show y'all here. Now, if you'll go back and look in December, you will see this failed, right? Why? Because December was a hard. Oh, I did the wrong thing. Here, I want this here. Right there, there, and there. If you will notice that in a bull market, such as we are in, that most, if not all, the triangles up outside the fourth channel work. If you will look, these are the three trades I did not take yesterday, right? You will notice two of them, you look at the quality of them, two of them had plus signs on them. They lifted very nicely. One of them was a super trap, right? And on the super trap, the triangle up was parallel with the biggest delta down. Parallel with the biggest delta down, and that's a star down in the fourth channel. This is a star down in the fourth channel. And if you even if you'd taken this triangle, it stopped over here. You will also notice on the 24 and the 24 only that the plus sign usually, though not always, the bar itself holds, and you can use a 1 bar stop on that. You'll have a slightly higher stop rate, but the advantage to that is your 1-to-1 gets easier because that bar is variable, but it's 10 to 15 points. So start with a 15-point stop and adjust your size accordingly to 1 point below the low of the bar. 15 points usually encapsulates that. A few of them are 16. Um, and if you look through that, this is the afternoon where we were in unfair pricing. Here's the plus sign up. Now, that wasn't a home run, but it lifted and it's a 1 bar stop. So your 1-to-1 was 8 points, right? So if you entered here, it was 8 points. Your maximum favorable excursion was 04, which is 24 points, 2-to-1 RR. Then if you look over here, So these, in order for them to work, right? So this one's not in supernova yet, but this is in supernova. Okay. The one bar stop failed there. What you want is to get that plus sign while it's in the bottom half of the channel. So that means that this is A plus when it's down here, when part of the bar is outside the channel. Okay. But then it goes higher and higher once you go supernova. But in supernova, if you get the thing on top, it should hold the second bar behind. Okay. So see, I just added a new rule. If you're going to take it at top, I think the smarter thing is to try to grab it when it's within 10 points of the low of this stop, because you need a 2 bar stop when it's at the top of the channel. Okay. And then you will notice yesterday, this is 113. You just had to wait all the way to the freaking close to get it all the way to the other side of the channel. But it shot the gap, right? And if you avoided shorting while you were in here, you avoided a boatload of stops. The downside will be is that sometimes we're bored. Again, dedication to strategy and repetition of strategy. So if you will go through, what I would like everyone to do is go look, and I want you to look in 2 places. I want you to look recently, but then I also want you to go back to December. Why do I want you to go back to December? I will show you. So you got to go back and overlay the fair pricing where the fair pricing was and unfair pricing was. But I'm going to load this really quick. I think I need 200 days. Give it a second to load. Now, I will tell you without looking on the 15 tick, you need both bars on the blue plus sign coming out of the bottom channel for it to hold. Okay, I'm just telling you right now, it's both bars, and it comes out to about a 15-point stop. Okay, on NQ. Okay, here's where we started to get in difficulty. Okay, so I'm just going to pick this up from the next day. This is when the market started to get into a difficult situation. So I just want to start on a clean day, and I want to actually find the down days, right? So I can tell you the up when we're already trending up works very well, right? So that's not a you'll see the plus sign on the outside of the channel. So there's an example of a failure. There's an example of a win that was 5 minutes to the close. I want to get into the next day, right? But I want to show you how, even in this difficult environment, I could focus on just one thing: unfair trading, which I can't do here because I'm not going to go lay it out, but I can focus on the plus sign. So here's 9 o'clock. I used a 1 bar stop. Remember, it's a down market. I'm going to be more generous with my stops, most likely, right? With that paid, I had to adjust to a close below on the plus sign. Okay, plus sign, plus sign, plus sign. If I use the close below there, I get stopped. So I'm going to have to make some. I'm going to have to make some adjustments for the down market here, right? Plus sign's not at the bottom of the channel, clearly getting stopped, right? Plus sign stopped. Plus sign paid. Why is this running slow? Plus sign at the top of the channel. That one paid. I wouldn't have taken it, right? Plus sign paid. Remember, this is December, where it was really hard. Plus sign took heat. That one paid. I'm going to go to the next day. Nine o'clock. Plus sign. Stop. Remember, I'm showing you this because this is where it was toughest, right? This is where it was most difficult. Plus sign. Is it having a hard time? I'm going to go with break even on that one. Paid. Stopped. Didn't take. And New York lunch. Stopped. Again, I would just simply add unfair pricing or below a prior day's low or something to that effect. But paid. Paid. You had to have a 2-bar stop to make it work, and it was the close, so never mind. Stopped. Paid. Paid. And notice I'm not making any distinction for supernova or anything else like that. I'm simply looking and going, am I below? Is part of the bar touching or beyond the fourth channel? And a plus sign. Okay. You can literally go through. This is December 19th. This is the heart of the bear market. And you were ripping them, face ripping these trades, right? There were some stops involved, right? Like that's, oh, well, that's 2100. Never mind. $9. Okay. So this is a day where I've sat there for an hour. I haven't gotten any trades, and I take this trade, and I probably got stopped. Although that's a very small bar, so you probably got to break even on it. If you were using a 1-bar stop, if you're using a 2-bar stop, that's just a straight up stop, right? Well, you can do it. Paid. That's 1028, and paid huge. Paid. Stopped. Oh wait, didn't touch the fourth channel. Didn't touch the fourth channel. It was in super. No, it wasn't. Stopped. And then we'll do one more day just so I can show you. Next day, right? You're going to come in thinking, oh, look, it's trend day up. I'm going to get it. So stop. Didn't touch the fourth channel. But it's in supernova. I would have taken that because it was supernova, right? But I'm trying to show just the initial out of the fourth channel. Take that one right there. That's 10 minutes to close. I probably didn't take it. You could have easily ended up with a down day here. It's a bear market, right? So now I'm going to get rid of all these days because it really slows down. Okay. So y'all should all be able to do that exact same homework and see how you do on good days and bad days, what your parameter is. And then I would add to that parameter fair pricing and unfair pricing is what I would add. Okay. If you keep that very, very simple, right? So in bull markets, you can do it with a 1-bar stop on the 24. On the 15, it needs a 2-bar stop. My goal is to get you all to profitability. And I don't mean like, oh, I made $200 so I can support my family. No. I mean making a lot of money, right? But you can't do it if you're changing strategy every day, and you can't do it if you can't tolerate days like where we're opening up right here, and it's just striving straight up. And your desire to make money is so much more stronger than your desire to stay on process, right? Your desire to be right is stronger than your desire to make money. You won't make it, right? You won't make it. I'm wrong all the freaking time, and you see how quickly I will adjust to being wrong, right? I know that my opinion about the market simply does not freaking matter, not one damn iota. Just doesn't matter, one iota, right? I was wrong yesterday. I quickly admit that I was wrong. I look at how I make the adjustment. So today, guess what I'm not going to do? I'm not going to look at the dome in terms of liquidity. Every time I want to say liquidity, I'm just going to mark it down and go, I know you don't like the liquidity. Take the process trade, right? That's my adjustment for today. Everyone in this room, including the gentleman that just stopped trading, is capable of making a boat load of money. There's two things that are involved in that. A, your ability to believe you can actually do it. Okay. The second part is your ability to hold on, but hold on loosely, right? You're going to have to adapt over time. Like today, in my mind, I wanted to come in and have a great day. It's going to be kind of hard as long as the market keeps doing this. There's no rotation down. I'm certainly not going to short it, right? This is trend day up as it gets, right? Even though we're pushing into unfair pricing, I don't care. I don't want to short it. I'll short when the shorting gets good, but it's not that way right now, right? And I'm definitely strategically better suited to finding great trades that I could possibly push for significant profits than I am trying to push the trade one way or the other. Okay, so I'll open the floor for questions because there's nothing to trade. I don't even have to prepare to trade. There's nothing to do. I won't short it. I don't care if it's unfair pricing, and I don't have the need to lose money to prove that I'm right or to capture an opportunity that might or might not work. I'd rather lose the money on the long side in this environment or be clear that the market's willing to rotate lower. Otherwise, I just got to sit here and go okie dokie. Questions? Helpful, unhelpful, criticisms, any of the above. You can DM me privately if you want. I won't mention your name if you have a positive or negative thing to say. There's no one in this room that's not capable. There's no one in this room that's not capable of making a lot of money. No one, not a soul, that's not capable of making a lot of money in this room. Okay. Xavier, you're right in there. You're just going to have to learn the setups. Xavier, I would suggest that you make good friends with Ronnie and message him and ask him to help you. Y'all come from similar situations and he can share a lot of wisdom with you. You still know that the blue triangle outside of the fourth channel, the blue plus sign outside of the fourth channel pay you very well. And you have the least amount of time of everyone in the room. Does he answer any of them? And then I have a ton of videos. I do the videos and I do the preview. He'll answer them. He's a good guy. He likes helping people. I've helped him enormously. I can tell you that. So just keep showing up. It takes time. Even if I was coaching you day in, day out, it would still take you about somewhere between 2 and 3 months till all the light bulbs started turning on. It just takes time. It's not as easy as do this, right? Well, with the plus sign, it is plus sign outside of the fourth channel. But most of the problems that everyone has is in their head, not on the, not on the screen. Do we have econ this morning at all at 9 o'clock? Okay, great. Yeah, I did. Here's no fact. I'll stop it now because I got nothing more to add. By the way, that guy is